Good morning, traders and market makers. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and with me, as we usually do on Tuesdays, is going to be one of the co-founders of Market Nilabh. Now, before we bring him on, quick little umbrella of what's going on in the markets right now. Last week, we had a tariff relief with the Supreme Court coming in and saying that, hey, these emergency tariffs, IEEPA tariffs that Trump has for 10%, they're illegal. Not allowed to do that. So we had tariff relief in the markets for about an hour or two until Trump came on live, basically saying, I don't care what the Supreme Court has to say. We'll file the new tariffs under Sanction 122 and put them at 15% instead of 10. So we've got a lot to cover today. So smash that like and subscribe button because Market in the Morning starts right now. Yo, Nilabh, good morning, man. How are you?
What's up, Kevin? Good morning, man.
Good morning, dude. Dude, a lot going on, man.
Yeah, I love that. I love that intro. The tariff threats lasted an hour, and then we're
Bro,
back. We're
it's
back,
just
baby.
back at it, man.
Yeah, there's always something. There's been this year and last year, basically since 2024, when Trump got nominated and elected as a president. There's just been markets have been so fun. I don't
Yeah,
know if
that's a
everybody
good
else
way
is
to put
enjoying
it.
it. I'm having a blast. I am having the best time trading these Trump markets.
Yeah.
Biden markets weren't the same. It's like when Trump's in office, although he is who he is, I just care about the markets, guys. I constantly say this, and that's what we're here for. We're here to break down the markets. We're not here to give some emotional opinion on politics and what's happening in the world. We're here to make money. That's what I'm emotional about. I get emotional over money. And when I don't have it, I'm more emotional. When I have it, I'm happy. I'm ecstatic. Everybody's living a joyous life, right? So let's dive right into it, man. There's lots
Bro,
to break down. We have great movement across global markets. So lots for us to take advantage on this week. As we know,
yeah.
last week was very range bound across equities, across commodities, across currencies, right? We did not see a lot of clean cut, clear movement because of a few reasons, right? We had data, conflicting data that came out in the past 2 weeks, right? Labor market data, inflation data. We had PCE, CPI, NFP, unemployment rate, and now we have so much more to focus on coming up. We are now coming right back to the way sentiment is supposed to be approached, and very clean cut, clear sentiment. So as you can see on gold nears 5,200 on Trump tariffs, right? Iran tensions boosting safe haven flows. So that's why gold has been very, very bullish. And Kevin was mentioning that Trump threatened tariffs, right? That there was tariff threats that happened, and then boom, instantly we're out the gate again, trending bullish. Iran tensions are still on the scene. All it's going to take, guys, for something like this to blow up again is one headline. That's all it takes. A headline that says we are launching a calculated missile attack on Iran. That's all it takes for the markets to eat it up, start rallying, safe haven see more inflows, risk assets see more outflows, right? And money starts rotating in the financial system. So let's quickly do a recap. So we had these tariffs, threats, right? Iran, US war threats, tensions escalating, boom, bullish bias on gold. We go over to ES. ES, we had the tariff threats, right? We had the Iran US threats. Boom, that adds to a more bearish bias on ES because it takes away from risk assets, right? So risk assets such as any US equities, risk assets such as BTC, all of these are underweight because of current macro sentiment that's ongoing, as well as, of course, technicals, right? We know that BTC is still bearish on the higher time frame as well. But you can see this bearish pressure is just added and added since Trump nominates Warsh as Fed chair, as we have this annotation right over here. So now if we jump into the charts, we can clearly see we have seen massive movements just from end of last week. This was the end of last week where we had the Supreme Court headline come out that Trump's tariffs weren't actually legit, like the revenue collected from it wasn't done properly. And we had this small, well, not small, but pretty big move in the markets on gold specifically, where the gold dropped 1.45%, right? That's a lot. That's a big price movement for gold. But What came after that was Trump immediately saying, hey guys, I don't give a shit. You think I care? As a president of the United States, I don't care. We're going to fight this. And boom, there's this plus a combination of the US Iran escalations. This set up a perfect reasoning for gold to continue its bullish momentum. And this is where it's very cool, guys, is that when usually what you'll see happen is that all these threats, all these escalations start happening and piling up over the weekend. And we talked about this last week as well. The reason why this happens is to subdue the impact on the financial markets. Imagine if war started at 9:30 a.m. Eastern on New York Stock Exchange open. What do you think would happen to US equities? US equities would dump. There would be such a bloodshed if something like that went on while markets were open. And a very good reminder of that is look at how markets right here in the start of April 2025, the outflows that we experienced as soon as the markets open, we sold off for hours and days, countlessly, blood being poured across Wall Street, people losing their life savings, people losing their pensions, right? Yeah. People cutting losses, massive losses booked down here. And then the real players step into the market because they understand market psychology. They understand what it's going to take for S&P to rally again. And all it really took was a single headline where Trump said, guys, everybody is bending the knee. We are going to get revenue from tariffs. And that's exactly what happened. Trump came out and said, guys, we're making great deals, and the market completely switched. So again, all it takes is one headline to amplify an ongoing issue or resolve something, right? In this case, when we look at gold, we look at intraday time frame. The ongoing issues here are tariffs and US-Iran escalation. Imagine, Kevin, if we get a headline during an Asian session that says missile attack launch. This is what I'm going to do. I'm going to open up the gold chart and I'm going to be like, where can I look to take a buy? Right? I'm going to start now. Instead of reacting to the headline, I'm going to look at, okay, what is market telling me? Oh, we're bullish. This is our upside target. We can potentially pull back to here. Cool. Now I'm going to go do my own technical analysis. And when it comes to this, I zoom out. I can see, oh, gold just broke above this high that we were under for the past few weeks at 5,100. We have now broken and created a new intraday high at 5,250. And now, because we know markets move in a wave formation, what's likely is that we'll get some sort of retracement before we head towards the upside targets of 5,600 and 5,450, right? We know that this can be very clean movement for a long-term play on gold towards the upside. Give or take minor pullbacks in the intraday time frame as we have right now, we know that the sentiment's going to hold. If we get a headline, boom, we're going to hit these targets nonstop. But that's what I'm currently waiting for, is that on gold, I'm being more patient at the moment. We are seeing a bit of a pullback after seeing some intraday profit taking by market participants as we had a big, massive move towards the upside. And that's your, let's say, leg one done of the move. Now you're going to see some sort of pullback retracement happen at one of these intraday levels, whether it be here, whether it be a bit lower here, or just retesting these highs to the previous left and this gap that the market opened up with on Sunday. So if we get something like this, sentiment remains intact, nothing changes, there's no headlines that's negating our current sentiment, then you know, okay, this is looking like a good opportunity for me to take some buy positions when gold is at my price point and ride them back up to these highs that I see on the intraday time frame. And that would give me a 1 to 4.7 risk reward ratio if I took it at this price point, which I'm waiting for. And if you know, that's a very good risk reward. That means for every, let's say you risked $1,000 on this position, that means you would be getting $4,690 back, which is an amazing risk reward. You never want to be in the negative, right? You always want to be trading with the underlying macro sentiment. You always want to be trading with the trend, and you always want to be trading a positive expectancy risk reward ratio, because over a large sample size of 100,000, 10,000 trades, you will come out profitable if your risk reward is high, and your win rate could even be below 50%, and you'd still come out very profitable with a 1 to 4. right? So that's what I'm looking out on gold is that we have this consolidation that happened overnight, but it looks like market still wants to push lower. So we'll wait for that. We'll see how New York session, and especially Comex Open that just happened, plays out, right? Commodities Exchange Open. We'll see how NYSC also impacts gold. But the overall thing is that we are currently retracing, right? Doesn't mean that we're bearish. This is still bullish on gold. Now, when I open up ES, Kevin, what do I see here is a fucking barcode. This is the shittiest price action I've ever seen on USA. It reminds me of like these times, right when you're printing these highs, even pre rate hike cycle times are right here. Highs get printed. You see some sort of retracement, but this is where people get scared, right? Like don't like when someone tells me, "Oh, this is scary." It's like, why the fuck are you scared of charts? What about this is scaring you? Right? It's because people are usually over leveraged. So they're like, oh shit, if this goes against me, I'm going to blow my life.
Count's gone.
Yeah, exactly. Okay, good job, Tweedledum. You over leveraged. Now let this be a lesson, right? We've all been there. We've all over leveraged a position and been sweating, like literally been sweating in minus 10 degrees weather, being like, oh shit, I think I'm cooked right now, right? It happens. But again, when you see something like this, the best advice that we can give you guys is when price is playing out like this and you still want to take trades. Let's say you only trade ES futures, right? Or NQ future. What you would want to do in this scenario is of course map out your levels, right? Whatever those levels may be. But you should only want to take the bottoms and the tops in these types of ranges because the market is going to be ping-ponging around because there is an uncertainty in the macro side currently. So there's no one clear-sided sentiment that's pushing money into equities. So you'd only want to take these types of move where you can catch the bottoms or the tops and not get caught up in the chop that exists in between over here. Because if you get caught up in here, let's say you take a buy, market goes against you, you're like, oh, it's a sell. You're going to get in your head. You're going to lose more money than you ever anticipated. And at the end of the day, you're going to be slapping yourself on the wrist. So when it comes to ES, we know ES market is saying that ES is a bit slightly bearish on the intraday time frame because of these factors, right? Tariffs, we see the EU freezes US trade deal. We have US-Iran escalations, US factory order misses. A lot of this is adding towards negative sentiment on S&P. Now, that doesn't mean that if we see a break of this level, I'm going to look for a short. I'm not, because we're heading into that territory where ES loves bouncing off of. And this is what you have to keep in mind is that even though we might see price action inch down to here, what are you going to do if market reverses from here or reverses from these lows as it has for the past 6 weeks, right? You want to be sure that when you are seeing these types of conditions in the markets, you're exercising extra patience. You're not looking to get chopped up. Like even if I see a rejection from these lows and buyers jump in, I'm not going to be looking for buys like here. Like that, to me, I don't want to get caught up in this mess over here and then stress myself out. So for that reason, unless we see ES push down into these lower price points of 6,700, 6,750, 6,800, I won't be personally calling out any trades here because I think this is an amazing example of situations to stay out of when you have contradicting sentiments. Like currently, ES is bullish on the higher time frame swing bias, but we're seeing bears on the day trading bias. So yeah, you can follow it, but you're most likely going to get caught up in this chop. And it's not always pretty over here.
Yeah.
What are your thoughts, Kevin?
Great point in that. This is an example of when markets are in a position that we should not be positioning ourselves, right? We have that flipped bias. Right now, there's a lot of uncertainty in the markets. And something I wanted to touch on was there's really two major types of asset classes. There's risk assets. That's things like Nilabh mentioned, Bitcoin, S&P 500, NASDAQ. These all require optimism, people to be almost nostalgic with the market. Oh my God, things are going so great right now. I want to buy. And then there's safe havens, the complete opposite side of that coin, where people are nervous. There's uncertainty. They pull out of stocks. They pull out of equities. They pull out of risk and they go into safe, right? They come out of risk assets and they go into a safe haven like gold. So I really like that gold trade setup that Nilabh mentioned earlier.
Yeah, that's a great point. Is that when the world is fearful, you'll
Yep.
see outflows in stocks, and when those outflows happen, that money has to go somewhere, right? Because hedge funds, institutions, algorithms, family offices, they have to pull this money somewhere. When
Right.
you have billions and billions of dollars and you know that risk sentiment is dropping, then you're going to pull money into any other asset that's going to make you money in the meanwhile, while you see outflows on risky assets, right? So that's why for the past 3 years we've seen massive rallies on gold since like over here, right? 1600s. This was October 7th attack, right? This over here between Israel and Palestine right here, and then led to further safe haven. You see Fed markets pricing in the next rate cuts, tariff threats. All of these are macro driven moves that last months to years, right? So the world's been going to shit, and gold's chart movement is the biggest telltale sign of that. Is when you see gold's price increase from 1600 to 5600 in a matter of 3 years, you know shit's going bad in the world. Like,
Yeah.
nothing good's going on over here, right? Now imagine that this is what Kevin was talking about, is that when there's optimism, then you'll see outflows in gold, you'll see money come back into US equities, just like how we saw in this example from April 2025 till now. This was pure optimism. This was markets rallying because Trump was saying, guys, every country's working out a deal. We're getting it. We're getting our money. We're going to be rich. Even the public is going to get paychecks because of the revenue from tariffs, right? And then you also had markets being optimistic that the Fed was going to cut rates and continue cutting rates, that inflation's good. And all of it comes to a halt when the markets are now like, guys, we're not going to cut. Fed's like, we're not going to cut anytime soon. We're pricing in less rate cuts. Supreme Court's like, guys, the tariff stuff, we don't know about it. We don't know if it's legal. Trump's like, I don't give a shit. I don't give a shit. Right. So you get a lot of this indecision when there's not clear cut optimism on the table. And when that happens, it's really best if we just sit on our hands and just kind of observe where price can settle, because you really don't need 10,000 setups in a week. Like,
No.
you can go do with just one good trading setup, right? And something like, when you know things are looking good, you should have high conviction in the information edge that you have from using a platform like Market. Like, I know gold is bullish. I see all these high impact headlines that have come out over the weekend, right? This was just 19 hours ago. But if we scroll down to the entire weekend, right, we'll be able to see there's so many more headlines that someone may have missed that led to a massive gap on gold towards the upside, and markets just rally, right? So when things like this happen, take most advantage of the sentiment that's playing, but also be cautious that when a pullback happens, you don't want to get caught up in the other side, because if a move is aggressive towards the upside, the other side will also be just as equally aggressive. All right. That's something to keep in mind a lot, is that when you see gold rushing daily, every single day, price pushing from December 31st at 4,300 US dollars an ounce, all the way to $5,600 in a matter of first 3 weeks of the new year, you better believe that the retracement and the profit taking on that is going to be just as aggressive. And it was. And this happens every single time in the financial markets, is that the upside move happens and the downside is equally as aggressive or as volatile. So in this case, now we're heading right back down to our area of interest over here on gold, where we are approaching these highs to the left, as well as this price sensitivity area. So now what I do is I go into the more intraday and lower time frames, and I start to observe how price is reacting over here. Right. So we can keep this open, but you can clearly see right now we're in a more of a corrective phase since Asian session yesterday. We had this sell off right after profit taking at 52.50. We've remained below 5,200, seen a bit of consolidation over here, right? And we're right now below this area right over here. So we are near our price sensitivity area and our price handle that we were watching out at previous highs for. And now it just comes a matter of, let's observe lower time frame price action If things start to flip, and what I mean by that is I'll draw it out over here for you low IQ visual learners. That if price was to do something like this, and now all of a sudden you start to see structure shift from making these lower highs to now making higher lows, you know that markets, that sellers are profit taking, buyers are jumping in, and now we should see some sort of price action that takes us back to the highs, right? That would be best case scenario. Is that we come back to these previous highs over here, retest it, buyers jump in, lower time frame structure shifts, and then on the and what that looks like on the intraday time frame is that we start heading back towards the upside. That would be very ideal. The other situation is that we could dig deeper. And if that happens, it happened. But that doesn't change the fact that gold is still bullish on both of our time frames.
Yeah, gold's looking way more high probability than the ES is right now. A lot of indecision in the S&P and the NASDAQ. There's the whole CapEx situation where large cap, things like Meta, Microsoft, Amazon, Nvidia, guys, don't forget Nvidia has earnings after the bell tomorrow. That's going to be big. This is sort of our last sort of window to find that optimism in the market. Not so much for the Nvidia earnings itself. The earnings report, in my opinion, it's probably going to be a double beat again, where they beat on earnings per share and they beat on revenue. But the real question becomes, what do they say on the earnings call? Are they going to give us any insider clarity that might help the big tech companies in lightening their CapEx? Or are they going to say, hey, well, we made a new chip going forward, just like they do on every call, and that brings us absolutely nothing? You know?
Yeah, that absolutely means nothing. But the markets eat it up, you know?
Yeah.
Markets eat up that optimism. Like exactly what Kevin was saying is that the slightest bit of optimism, the markets will eat and run with it. And purely that's because the greedy nature of human psychology. Humans are greedy beings, right? You are greedy, Kevin. I'm greedy. We're greedy with our time. We're greedy with our money in the markets, right? It's a natural human reaction to just want something right now versus wait for it. So the tiniest bit of optimism makes the markets run off like they're smoking crack or something. Like it makes it so aggressive that Trump could be like, hey guys, just had a call with Xi Jinping and he really likes the gift I sent him. Trade deals may be on the way. And boom, market's gonna eat it up. ES at 7,500. You know what I mean? It's not. It's purely just buy the rumor, sell the news play.
Absolutely.
So exactly, like and that's the thing is that ES is in such a state. If we had such a crazy beat for Nvidia, there's lots of optimism that would 100% drive ES to a higher price point because of the impact that these large cap stocks have in overall weightings in US equities, right? But in my opinion, it would still not be enough to take out these highs, is what I'm thinking. Is that even if that earnings call was solid, was amazing, exactly how Kevin said, double B, I don't think we'd still take out these highs because there's other things that are ongoing as well. The tensions, right, with US, Iran, the tariff threats, like that's still ongoing. And it's really kept us subdued. You can see we had a lot of clean movement when there's two things lining up, trade optimism, as well as rate cut bets being priced in, which were further pooling in money into risk assets. Now, when you don't have trade optimism and you see that the rate cut bets have been now pushed back down to later half of this year, why would the markets continue to rally? And that is a perfect sign for us is that, okay, conflicting macro biases and price action is looking like dog shit. So why would I want to take a trade here? Right?
Exactly. Even on the daily candles, guys, just look back at the past few days. If we're looking at something like ES and NQ, I mean, talk about barcode, red candle, green candle, red candle. We take out previous day high, we boom, reverse, close red. Take out previous day low, we reverse, we close green. There's been zero consistency. There's been no follow through, and that is because of that uncertainty lingering over markets. What I really want to make sure you guys remember is that when there's uncertainty in markets, people are much quicker to sell. Uncertainty creates panic, Panic creates selling. Selling creates selling pressure, which will have follow through. Exactly. When Trump first announced tariffs at the beginning of last year, sure, it might have sounded like, hey, we're going to do tariffs, we're going to bring manufacturing back, all these positives, but markets sold off over 20% on the S&P and the Nasdaq. Why? Because of the uncertainty. We didn't know how it would really impact inflation, things like that. He turned it around. April came around. Like you said, everybody's bending over. We're making deals, 90-day stay, etc. We reverse, we go bullish. That's optimism. Now we're back at that same point where the Supreme Court is saying you're not allowed to do this. He's saying, I don't care. I'll be as unconstitutional as I want and tariff everybody as I please.
And I'll tariff everyone. I'll tariff everyone.
Yeah, it's like the Oprah of tariffs. Everybody gets an extra tax and the consumer is going to front the bill.
Yeah, so exactly.
We got to be careful. We got to be patient. We got to be aware as traders, whether you're a swing trader or day trader, we have to be aware to the underlying conditions of the market. And right now, if you're an ES or NQ trader, the stronger underlying condition is bearish because of that uncertainty. Just like for gold, it'd be bullish because of the uncertainty.
Exactly. Beautifully put. Gold is pushing a bit lower, so we'll keep an eye out. But something I really want to bring, exactly what Kevin was saying, was that during that that when Trump came in, we knew it was going to happen, where he made the announcement that in March, he's going to be announcing the tariffs, and the sell-off started end of February. Markets started pricing it in from the ES highs of 6,200. We got the outflows. It wasn't until start of April where we had the tariff, the meeting, the inauguration, right? Where he showed what was it called? Actually, I forgot the name of it, but he had some name of it, some cool, funny name, something with terror. But anyways, we got this massive sell-off, and all it took was one headline. And I'm going to click here on Markets Backtest Fundamentals tool. I'm going to click this 1 hour candle on ES, on US equities, S&P, which was on April 9th at 1 p.m. Eastern on Wednesday. And it's going to tell me exactly what caused this massive movement on ES, where a single candle was big enough to overcome over 50% of the sell-off. One single hour, and all of it came back because Trump announces 90-day pause on most tariffs, excluding China. Keep that in mind. Yeah. Authorized, and this was 320 days ago, guys. This is how crazy market is that we're able to tell you exactly what happened in every hour of any chart, any financial asset. We're able to tell you because we've engineered solutions that do this, unlike anything else. But before I get all excited talking about the company that we're building, let's get back to this. So okay, here we go. Gold is pushing. Sorry to take a break. Gold is pushing lower here. Time to put on our detective caps and watch how lower time frame price action acts over here. So that's all it took, was that one single headline, and boom, markets rallied. And that truly was the bottom of that massive sell-off. And believe it or not, I have proof of this in both wire transfers, in receipts, as well as on my Twitter. I bought the 48.50 lows on S&P 500 because of one thing that I read when I was 17 years old, Liberation Day. That's what it's called. Thank you so much, Kyle. Liberation. This was the Liberation Day move, guys, where Trump said the U.S. is going to be liberated, and that's what I knew. It was just a funny name for it. It was that you're liberating the United States. So that's all it took, was that 1 ounce of optimism that drove us. And as I was saying, catching a buy like that, the only reason I was able to do it was because of Warren Buffett's quote. When the world is fearful, be greedy. That is the time to be your greediest that you've ever been. Because while everybody else is panic selling, there has to be someone else on the other end of that transaction. Like, who do you think is going to start buying after the ES is down after S&P is down nearly 30%? Everybody, every institution, every fund, every hedge fund is going to buy S&P after it's down 30%. The only people panic selling are the retail crowd, right? Are the mom and pops who don't understand market dynamics, right? And whose son blatantly told them to buy S&P at all-time highs, and now they're panicking because they're down $250,000 on their life savings and they were supposed to retire 2 years down the line, right? And now they're blaming their pothead son who does nothing, eats Doritos all day, and sits on the couch, right? You don't want to be in that situation, which is why it's important to understand market dynamics, which is why it's important to guide those around you when times like this are happening and tell them, hey, you know what? Don't sell because this is just short-term volatility. And within the next year, within the next 6 months, things are really going to change, right? And they did. Things turn around faster than they happen, right?
Yep.
So where would you buy gold? Where do we buy for gold? So number one thing is I wish I knew the answer. Where to just
yeah,
buy.
right.
It comes down to intuition. It comes down to practice. It comes down to knowing and mapping out scenarios that may play out. Gold could reject from right here where I had placed this. Is it going to? I don't know. Am I willing to take this bet? Yeah, I'm willing to take it because of the price sensitivity area that we're currently at, right?
Right.
If you're not willing to take this, okay, then maybe we got to wait for a bit more confirms, right? Maybe the confirms could be the actual switch in structure that you would see happen. If that structure doesn't shift, then all you're really going to see is maybe like a spike and then market structure start to shift. But a clean area would be like, let's say you come down to these highs, gap fill, you start seeing price reversing like this in the lower time frame. Now you're like, oh, okay, we acted as support. Buyers are jumping in. Sellers are taking profit from this move. Now it's time for me to buy. So you can buy here. You can buy when price develops here. You can buy when price develops here. Or if you really have massive testicles and massive balls, you can buy right now, right? But it all comes down to someone's preference on how they like to trade, how confident they feel. Like I'll give you an example. Market open, I bought a minute into market open on this gap. The reason I did that was because I knew gold was going to continue pumping as we had tensions over the weekend. We knew sentiment was fresh. Why wouldn't markets run? So I bought at 51.11 and I held all the way till these highs yesterday. That was purely a big ball play. I didn't wait for any confirmations. I waited for market open and I bought the second minute candle because I have big balls, right? There's other times where I don't want to buy because price action and sentiment is not probably lining up for it. But this is a perfect example of we had price action over here that where buyers jumped in and drove markets to 52.50. We have these highs being retested. So to me, this is a perfect area to intraday buy. And I will be risking some of my profits that I made on this massive play towards the upside on this buy over here. If I get stopped out, cool. I take a $1,000, $1,500 loss and I move on with my day. If I make money, if this plays out towards my upside target, boom, I've just made like 5, 6, 7 grand, right? Again, it's all about that risk reward. It's all about knowing exactly and waiting for where you want to enter.
Yep, absolutely. Be patient for those areas, but don't be too patient that you let markets react.
Yes, that's very key as well.
Yep, where the whole move goes without you and you waited for your zone, you didn't take the entry, and then you watched it move without you.
Yeah, and now you're depressed. Yeah, that's what happens, when you have that's what I kept saying. You got to have big balls in this game.
Yep. I love this area we're at right now. Key level from market that market AI called out a few days ago. 51.45. Our next market level is 52.60 actually. Bottom of the range, we see we've been creating some higher highs lately. We know fundamentally we're leaning bullish. I think this is a good area to try to find some gold longs here. If you want to try to keep those stops around 51.20, entry around 51.40, 45.
Yeah, I think that's solid. I think as long as your stops can be a little bit below the weekly gap open on Sunday at futures open, I think that's a solid play for an intraday trade towards the highs because sentiment is still intact. Sentiment is still intact. Overall swing bias is still intact. Nothing has changed. This is just short-term profit taking. Markets repositioning themselves after we had a massive move last week, all the way from the lows of last week to the highs of this week, right? It was such a massive move. It was about 8% on gold where we pushed up last week. So a retracement like this, which is only 2 to 3%, is normal. It's normal. It's nothing to freak out about. It's nothing to get your panties in a bunch. and start tripping, right? You want to be objective, you want to be focused, and you want to understand that, okay, this could either now I've taken buys at a price area which is likely to play out. It's all about probabilities. This area is way more likely to play out in buys versus, let's say, Kevin trying to buy at 51.80.
Right.
Now, why is that? Because a lower buy price is already more attractive psychologically, right? It's the same thing with a discount. Would you rather pay $100 for something, or would you rather pay $10? You'd rather pay $10, right? It's psychologically a better price point to buy at. And it's the same thing in the market. It's just a transaction. Whether it goes down to 50 on futures, 51.30, or a bit lower than that, doesn't matter. Markets are still bullish. We'll see how it reacts there.
Yep.
Some question just came up, but I didn't get a chance to look at that.
I want to see the volatility when it hits the key level. If we don't move quickly, in contrast,
not necessarily. And I'll give you 1,000 examples where this is false, because when there's low volume and volatility, it makes the perfect scenario to enter trades. Right. It makes the perfect opportunity to enter trades at a key level. If you look at February 17, the volatility then was subdued. And we were in that area on February 17, last week's lows, Kevin, where right there. Look how many times we were in this area. We were here for over a day, and volatility was not strong here. Volatility was only strong right after. But does that mean this was a sus area to buy? No, we had so many indications. We had consolidation at this area. Buyers were pooling in, and boom, that led to the next massive leg towards the upside. So not always do you need high volatility for a price level to hold. When volatility is low, it's just as good. Like, you have just as good opportunities. It makes it easier to look for your entries. You're not being tossed around and bullied by the volatility either.
Yep, right over here too. We consolidated. It was an overnight session. We consolidate for about, this is 4 hours right here, guys. This 15-minute time frame, 4 hours of consolidation led until a 4-hour pump that went up about, let's see, measurement tool. That's 520 pips on gold right there, from that same green area. What happened next time we came down to it gave us a similar move. So very strong area there. Now, same situation where we're at this area on gold. Now, something I'd like to point out to you guys is if you're doing your analysis on like an hourly, 4-hour, don't go so small. Don't go, okay, I found my zone on the 4-hour. Now I'm going to execute on the 5. You're going to get stopped out 40 times before market goes in your favor. If you're looking at analysis on the 4-hour, try to execute at least on the 15. At least on the 15, maybe 30-minute as well to help confirm. But like for me, for this example on gold, I would need to see sort of like this candle right here, where we have a smaller red body, a longer lower wick, and that wick should be rejecting the zone we had, right? That would give me an idea of a rejection off of this zone that we're reacting to this area. So can always be patient, but never too patient. I don't want to be like, oh, well, when we come back above here, this is when I'm going to look to see if we can pull back. Sure, you could do that too, but then at this point, when price is all the way up here, do you really want to try to take a breakout trade with the stop loss this wide?
Exactly. Is that your risk reward becomes negative there.
Yep.
So it's like it comes down to, okay, I have this price point. I'm going to wait for it, and I'm going to wait to see how markets react. Like currently, we're just seeing a push towards the downside on gold. Right, gold is now right back at those levels where we were initially rejecting. Do you remember, like the reactions at market open? So we are right at that gap now, and this is that aggressive move towards the downside. So if we start seeing rejections now, where we're going to head up is towards the upside. Like if this is the low at 51.12 on the CFD, which is I guess 51.25s on futures. This is a good price area to watch because we are at that weekly open right now. Yeah,
this is definitely a tough spot. A lot of volume just stepped into gold too right here, guys. Look at that.
And I wouldn't be surprised if we see an immediate reaction right over here.
Yep, exactly. Don't forget, guys, 9 o'clock just hit. So make sure if, again, you're day trading, you're on a 5-minute, you're on a 15-minute, give yourself the opportunity to look at markets from a different perspective.
Yep.
hourly just closed, check the hourly candle, check the 30-minute candle, check the 15. Don't be so zoomed in.
Yeah, very good point. Very good point.
Guys, make sure you run the like button up. This has been an absolutely killer episode of Market in the Morning. I'm sure me and Nilabh could probably just go all day.
Yeah, we could literally go all day. Like I could sit here and watch the 1 minute chart. Sometimes you just got to put on the 1 minute chart on your favorite financial asset and then just watch it. Watch how it's like watching paint dry. Is it the most fun thing ever? No. But if you like watching paint dry, you like watching paint dry. I like watching the 1 minute chart on gold and just seeing how every minute price movement develops.
I'm more of a watch water boil kind of guy.
Ah, you're that. You're that type of guy.
That's
Huh?
with the ES. That's definitely with the ES.
Yeah, watching water boil and cool down.
There we
That's
go.
what you've been doing.
All right.
But
Guys,
one more quick thing.
yeah.
If after we're done, you start seeing price action develop on gold, where again you're seeing these market structure in the lower time frame shift, this is your buy, guys. This is your buy opportunity because of the key price area that we are currently reacting to. This makes it a very attractive buying area if that price action starts shifting. If it doesn't shift, then we can pull a bit lower, and let's just quickly map out potential areas where we could go lower to, right? We have this previous area. I'm just going to map it out right over here. I see a bit of an order block over here at 55.50s, 55.75 is what I would be watching out for if this area didn't hold. But as I was mentioning, is that this gap area, which I previously took the buys and rolled them up till here, we just reacted to it again. Does this mean that this is the exact low? It doesn't. It just means that we are going to watch and see how markets truly react in this price area.
Awesome. Awesome, guys. Gold nuggets left and right today for today's Market in the Morning episode. Nilabh, thank you for being here.
Of course, my brother.
Awesome, guys. Make sure you smash that like and subscribe button. Join us for Market in the Morning Tuesdays and Thursdays. And of course, we have special episodes whenever there is some type of big economic event, whether it's non-farm payroll, CPI, PPI. We want to be here to cover it for you guys so you can see how to use market to your advantage. It's got a great playbook to take advantage of how those economic events come out. So, guys, smash the like and subscribe. I appreciate you all for being here.
Take care, guys.
Take care. Peace.